right, welcome back to Robinhood Stock Market Watch List. My name is Carlos, and today is June 25th, 2023. It is Sunday morning where we do our live stock market meetings. That way we can kind of do our due diligence for the next coming week. That way we're aware of what's going to happen before it happens. This always gives us a huge advantage. That way we don't go in the week just kind of willy-nilly using the hope system, hoping that it's going to be, whatever you want it to be, when really we need to really dive into it and see exactly if the week's going to be more bullish or if it's going to be more bearish. Now, if you were participating in our meeting a couple weeks ago, we talked about all the events that took place in the last couple weeks. So, which was a huge advantage to take advantage of the volatility. It was very bullish the last, couple months. But as we were approaching Triple Witching Day and a holiday week, that we knew that we were prepared for a lot of volatility. And everything took place exactly the way that it did. So, but this coming week, which is not a holiday week, and there's not a whole lot of, bearish activity, that this week should be more bullish. But we're going to dive into this week to see exactly how the week's going to play out. But also the next following week, which I wanted to go over, which is a holiday week. Going into July. Now, let's talk about that really quick here. We're kind of getting a little ahead of ourselves, but because it's a holiday week, we might not be having a stock market meeting that weekend. So that's why we need to talk about it now, really quick. But so Monday the 3rd is a half day. So the stock market's only going to be open for a couple hours, but Tuesday, which is the 4th of July, the stock market's completely closed. So really there's only going to be 3 full days of trading days: Wednesday, Thursday, and Friday, the 7th. So holiday weeks are usually bearish, and so I anticipate that this coming week is going to be bullish because the stock market needs to come up before it goes down. I mean, it's been kind of coming down the last couple of weeks, and so this would be a great week for the June 26th through the 30th to be mostly bullish, and then the next coming week will be bearish, and then it will begin to kind of continue its uptrending momentum as we go into a new quarter and a new month. But I also want to remind you that I'm going to upload it really quick, that anytime we have a new month, there's a lot of like EV companies that start talking about their their deliveries and their sales and deliveries, and so but the quarterly one is a big one. So we're in a new quarter. That's huge. So a lot of the EVs are going to talk about how well or how bad that they did during the second quarter, now that we go into the third quarter. And so that doesn't mean that we're going to expect bullish characteristics, because it could easily provide a lot of bearish characteristics. We just need to anticipate a lot of volatility, and the best way to take advantage of that is to straddle. That's always something I recommend, is to always be straddling, because straddling, it has to do with stock options, and when you're betting stocks go up and down at the same time, it doesn't matter if it goes up or down, as long as it picks a direction and goes that direction pretty significantly. And that's where we can really take advantage of this on Monday, July 3rd. just by holding on to both calls and puts for EV stocks. Now, going into this week, we always need to look at economic reports, and we usually like to use the investing.com website or application to pull up our economic reports, our scheduled economic reports. So we always like to pick the United States. Under importance, you'll see 1 stars, 2 stars, and 3 stars. We want to put a check mark under there because we're telling this website and the system to pull everything that'll have the biggest impact on the United States stock market. So looking at this week, we don't see anything for Monday. So Monday or tomorrow is going to be kind of like a chill day, or a day that can kind of absorb weekend news. Now the weekend news, which is what we've been getting most of, has been a lot of the issues with Russia, with their internal militia or their rebellion or whatever that we want to call it. Which the news which has been a very interesting piece of news lately. And the last one that we saw yesterday was where they come to some kind of agreement, which doesn't make sense. When you're a rebellion and you think that and they're saying, oh, we'll forgive whatever you did and nobody's going to get in trouble. It's like there's BS right there. There's somebody's lying, and we're not falling for it. So then we have to ask ourselves, will Wall Street fall for this, and investors and all that? I doubt it. So there's a good chance that they're going to call their bluff, and this could be very bearish, but to be determined. We'll have to kind of take a look at how the U.S. futures are going to respond to this news later on today, here in about 6 hours. If it's pretty, red, then we know that tomorrow is definitely going to be pretty bearish. Or if it's pretty green, then it's going to be pretty bullish. But if it's not going to move right away within the first couple hours of the U.S. futures opening, then it's just going to wait and see what happens during pre-market. So it's going to be interesting, but to be determined. But going into Tuesday, June 27th, we have the buildings permit that's scheduled to be released 1 hour and 30 minutes before the stock market opens. And so the building permits, which is an important report, and this is a monthly report. So the more rare these reports are, the more volatile it's going to provide the stock market. Meaning, if it's a weekly report, that happens often enough that it will have a mild effect on the stock market. But if it's a monthly report like this, it's going to provide a very decent amount of volatility. But if it's a quarterly report, like we see coming up here on Thursday, June 29th, that's going to provide a massive amount of volatility. So now we can kind of measure this level of volatility, so that way we can be prepared for it. But how we can determine which direction it might pick is based kind of on the forecast versus the previous. But sometimes it's tricky, because sometimes what if bad news is good news, or what if good news is bad news? But we still always want to try to focus on the majority of the time. And so the majority would be again, comparing the forecast versus the previous. Now, most reports, the forecast needs to be higher than the previous in order for it to be bullish, except for 2 reports. That is the initial jobless claims, which is the unemployment report, and then we have the crude oil inventory levels. Now, the reasons why those numbers need to be down is because if the crude oil inventory levels are down, that means people are driving, they're flying, they're spending money on the economy, and that helps the economy. If the unemployment level is down, that means people are working, they're making money, they're paying taxes, they're shopping, and that helps the economy. And that's why these things, those particular things need to be down, but everything needs to be up, because if everything's up, that helps the economy. And if you're not sure what any of these are, feel free to click on it. A new tab will appear, and it will tell you in a brief, simple paragraph of what it is and then how it will affect the stock market. So for example, with the U.S. building permits, the building permits measures the change in the number of new building permits issued by the government. Building permits are a key indicator of the demand in the housing market. A higher than expected reading should be taken as a positive or bullish for the US dollar, while a lower than expected reading should be taken as a negative or bearish for the US dollar. I don't know if you received your Zillow report the other day, but mine says that my home just went up 2%. So there's still obviously a demand for homes, because people are still buying and as well as selling. And look at this report. It says the forecast is expected to be higher than the previous. The forecast is 1.49 million, where the previous was at 1.41 million. So this is showing, this is good for the economy. People are, building homes and whatnot, and that helps the economy, and it creates revenue and taxes and this and that. And so, but what if this is good news that's bad news? So what that would mean, that if this is up, this could scare politicians or investors, Wall Street or whatever, because now the government's going to say, oh, we got more work to do. We got to keep continuing increasing interest rates, so that way it could lower all that stuff. Well, that makes sense and all, but they didn't increase interest rates this last time, which makes it more anticipated that they are going to increase the next interest rate hike decision meeting, which is, let me show you here. Let's say we'll Google it, interest rate, and then we'll go investing.com, and then boom, should be the first one right here. Now we have the rest of this year's schedule of the interest rate hike decision meetings. Doesn't mean that they're going to actually increase or decrease rates, but it does mean that they're going to talk about it, and that means it's going to create volatility. And it looks like, look right here, you guys, July 26th. That's in 1 month from now. And so, it's very anticipated, but there's no forecast yet, and it took like a matter of several days before June 14th for them to come out with a forecast. But just know that we are a month away for another interest rate hike decision meeting, and it's more than likely that they are going to increase the rate probably a 0.25%. And so, and if we follow the pattern, maybe they'll probably do another pause on September 20th. They'll probably do another 0.25% interest rate hike on November 1st, and then probably a pause or whatever on December 13th. We'll see. Or maybe they'll have one more interest rate hike. Maybe they'll do that on September, and then maybe they'll pause the next ones, because maybe they're trying to get to 5.5%, which is something they've talked about a lot in the past. And so, but there's been some speculation that there may not be interest rate easing next year, and maybe it will be the year after. So we'll just kind of have to see what happens with the economy, because at the same time that they're trying to create a recession, just kind of a mild recession, and that was another thing I kind of wanted to talk about, is kind of where are we at with all that. And so let me see here. I put it somewhere here. Let me upload it on another page here. For some reason my learning chat room's not working well on the desktop. Hold on here. So I'm going to upload it right here. And so I wanted to kind of go over where we're at with our stock market and our economic cycle. So, and I talk about this every single month. Ever since we were on the market bottom, which was about 6 months ago, I mentioned that when we're on the market bottom, this is a time where we need to start buying technology stocks. But to wait on finance stocks because we're not quite at the full recession yet. And with this full recession, we're a lot of the financial stocks are involved, and but we're waiting to see their bottom before we start buying the financial stocks, meaning like J.P. Morgan, Chase, Bank of America, Wells Fargo, all those types of banks, especially the ones that pay dividend stocks. And even though, and a lot of people think, a lot of new traders and investors think the market should be following the recession. But it doesn't work that way. And the reason why is because investors know that the full recession is near, but the early recovery is right around the corner, and that's why they start investing into certain particular stocks now, because they want to take advantage of it prematurely, and that causes the market to go up, so that way people can have a much lower cost. And so, and that's why the market's been going up the last 6 months, and the full recession is probably, maybe it's right now, maybe it's in 3 months or so, maybe it's but the stock market is still going up because it knows it's just like what we're talking about. Now, when the stock market peaks, and normally it peaks right around the right before the fall. I mean, right before or right during the beginning of the fall, and typically during like November, right in the middle, we want to get out of all that technology stocks, because as we go into the fall and the winter season, that is the bear season. Get out of technology stocks and the finance stocks. Secure your gains, and it's time to get into energy stocks, meaning like oil stocks, gas stocks, things like that, because during the winter season, the fall and the winter season is the time where people do a lot of traveling for the holidays, a lot of flying, a lot of driving, and it's the winter season. It's a very cold season. A lot of people consume a lot of energy to heat their homes, whether it be gas, natural gas, or electricity and all that stuff. Technology or energy stocks do very, very well with that. And if you have like a 401k, long-term portfolios, it's a great way to kind of to switch in and out, switch between your technology stocks and then energy stocks, back to technology stocks, back to energy stocks, like every 6 months or so, just like clockwork. And with your long-term portfolio, you can easily gain 80 to 100% every year just by doing that. Just don't buy and hold and let it sit there. You talk to your Edward Jones guy or whatever, all they're going to say is just put your money in there and set it and forget it. Don't even look at it. That is a wrong answer. We want to be actively changing our portfolio every once in a while, so that way we're always riding the wave and never losing our gains. Because if you have a long-term portfolio, that's what you usually see. You see every like 6 months, everything goes up. 6 months, things go down. That can easily be avoided by utilizing this cycle that repeats itself regularly every year. And then we have the economic cycle that repeats itself every 10 years, just like clockwork. And all these Wall Street guys, politicians, and the world leaders, they know this. And what they do is they pour fuel on the fire, making the situation more volatile, which provides more opportunities, not just for them, but for us as well. As long as we're aware of it, we can take advantage of the situation before it happens. And that's why I wanted to kind of go over that. But I also had somebody that wanted us to talk a little bit about the cryptocurrency and its cycle. And it's something that we like to talk about every once in a while, even though we are a little ways away from Bitcoin halving, which Bitcoin halving. So the story goes, when this guy decided to create cryptocurrency, he created Bitcoin. And when it came out, it was $1, and it plunged to like a penny, and nobody wanted anything to really do with it. But everybody was like, this is the future. And anytime you have something new or phenomenal that happens, you always have these copycats. And so, but the guy that created Bitcoin wanted to ensure that it was always going to appreciate no matter what. So how do you get something that doesn't really exist to appreciate no matter what? And what he created was an event that was called Bitcoin halving. And what happens is every 4 years it's programmed to do this, where it takes Bitcoin out of the system, but it leaves the money there. So when you take half the Bitcoin out of the system, you leave the money there, what happens to the remaining Bitcoin? It doubles. So other investors want to take advantage of the situation. They pour more money into the system so that way they can, participate. So if you have more money poured into the system and already suddenly it doubles, all of a sudden that means it quadruples. So every 4 years, Bitcoin's high levels quadruples 4 times. So if, for example, if the last if Bitcoin's because Bitcoin had reached $60,000 during its peak, just a couple years ago, or during the middle of the last Bitcoin halving event, that means that the next high levels for Bitcoin will be 4 times that. That means Bitcoin will be $240,000 in just a couple years. So, but we can use this this chart here as a way to predict what's kind of going to happen with Bitcoin and all the other cryptocurrencies usually like to follow. And so we see this pattern where, so every 4 years we have these big black lines, and then we have these little faded lines which represent 1 year. So we have a total of 4 years in each halving little block. But the Bitcoin halving event usually takes place sometime in the middle of the year. Like, for example, the last Bitcoin event took place during May of 2020. So the next Bitcoin halving event will take place sometime in the middle of 2024. So, and it's 2023 right now. So we are a year away from the next Bitcoin halving event that takes place. So what we see is that the Bitcoin halving event takes place. We don't see an instant massive surge or anything. It's a gradual effect. Like every week, all of a sudden it gains, and then the next week it gains more, and the next week it gains, and so on. It's not like a single day or 1 day, wham bam. It's very gradual, but it is significant. So what we'll see in 2024, right after the Bitcoin halving event, we'll see a gradual gain throughout the next 6 months. And then in 2025, it is full on bull market mode for pretty much all cryptocurrencies. We're going to see some massive gains. We're going to see it surpass $60,000, $70,000, $80,000, $100,000, and then towards right at the end of 2025, that is when it's going to peak. And in 2026, we're going to see everything plunge, and just slowly it's going to keep going down, and everybody's going to say, "Oh, I hate it. This is a scam, blah blah blah. This is, is it going to go back up? This and that." We're going to see people manipulate it, just like last time when Elon Musk says, "I'm going to get on Saturday Night Live," and everyone's like, "He's going to mention Dogecoin," and it was very predictable, and he did. But I told everyone, remember, guys, buy on rumor, sell on news. As soon as Elon Musk gets on Saturday Night Live, that is when we need to sell. We need to sell right before that, because that is when the news part of it takes effect, and it did exactly what we were talking about, and it plunged down, and that was the time we needed. Everyone's like, "Oh no, Dogecoin is going to reach $1." I'm like, "No, it is not. Get in, get out. Let's secure our gains." And there it was. The bear market, lasted for an entire year. So these are long seasons. It's not like the stock market, where the stock market seasons are 3 months or 6 months. We have an entire year worth of a bull market and an entire year of a bear market. Then the next couple years are just kind of ranging right in the middle between the the two highs between the halving events. So just know, and we'll talk about this again more later on in the future. But like again, we're 1 year away from all that taking place. But this is exactly the way that it's going to play out, because it's the exact same way that it always plays out. So it just makes it even more predictable. So that way we can take advantage of what's going to happen before it happens. So that is my little crypto little spiel on that. So let's go back to our economic reports for the week. So going back to Tuesday, we went over the building permits. So far, it looks bullish if we want to focus on the majority of the time. Now, the core durable goods orders for the month-over-month of May. This report is scheduled to be released 1 hour before the stock market opens. So we have two reports that are scheduled to be released before the stock market opens, which will help provide a massive amount of volatility, which is in our favor for those that straddle. And so the next. So we don't have a forecast yet for that, but most likely that will populate maybe tomorrow morning during pre-market. So we'll have to kind of come back and see what they anticipate, so that way we are aware, will it provide bullish characteristics or bearish characteristics. Now the next one, which is the CB Consumer Confidence Report for the month of June. This report is scheduled to be released 30 minutes after the stock market is released. The forecast is expected to be higher than the previous, which tells us to be prepared for more bullish characteristics. So we have two reports here that's telling us to be prepared for bullish characteristics, unless good news is bad news. But then the next one is the new home sales report, which has been very interesting at how it's been going up as home prices have been going up. I've always mentioned that this report kind of tells us that people rather almost buy a brand new home for probably less money than an existing used home. Only makes sense. And so that way you're getting something brand. It's kind of like buying a brand new car. If you can buy a brand new car for less than a used car with 20,000-30,000 miles, why wouldn't you buy brand new? And so, but we do see that the forecast is expected to be less than the previous. And so, to be determined on how that may play out when these two reports, which are scheduled to release at the same time. We may see, mixed characteristics, or we could see, the market, the pre-market open up very, very high because of these bullish economic reports. And then this report, if this is more dominant, it could cause the market to kind of take a dip, and we may, it may recover, it may not, so, to be determined. But at the same time, we also need to kind of focus on the White House and the president's schedule, and that's a different website. Now, a lot of these, the president and the White House schedule is usually during power hour or sometime during the middle of the day. So the economic reports is our morning calendar, but the president and the White House schedule is our evening schedule for volatility. These are volatility schedules. So that's why it's extremely important that you guys master these. And so, and the more that you look at this regularly, you're going to memorize them. This is so easy. You just have to start, diving into it and getting used to it. Learn on the fly, learn on the job, and it's extremely valuable information. I'm surprised they're not charging an arm and a leg for this. So take advantage of it. This is free information. And so Wednesday, June 28th, we have the Federal Jerome Powell is going to talk on that day, and Thursday, June 29th. So be prepared for a massive amount of volatility. Now, usually one of these days is going to be bullish and the other one's going to be bearish. Normally, the first day is bearish and then the last day is bullish. But it could be either way. But it's still a great opportunity for straddling both calls and puts. Because when it comes to straddling, it doesn't matter if the stock or the market surges straight up or plunges straight down. As long as it picks a direction and goes that direction, it will be profitable. And the reason why I say that is because you can only lose what you have on one side, but your gains on the other side are potentially unlimited. So worst case scenario, if you lose 100% on one side, most likely you just gain 200 or even 500% on the other side, which washes out your loss on the other side and puts you ahead because your gain is so significantly larger than the loss that you had on the other side. And that is why we straddle. It doesn't matter if the market goes up or down. It is a win-win strategy as long as we implement certain rules and guidelines that help maintain consistent gains and manages our risk. If we go violating our rules and guidelines, that is when you can start having accidents and start losing your gains, and we don't want that. And so that's why, just like any other strategy, there's always some rules and guidelines to maintain certain things, so that way you're doing it right. And so those are things that we've always talked about, and that's something we can always talk about again here shortly. Which we can here. Let me grab the rules and guidelines really quick, and then we can kind of talk about them, because these rules are so simple and easy, but for some reason they can be very difficult for a lot of people to follow because of how easy that they are. I had an old friend tell me once you think you have the stock market figured out, that is when the stock market has you figured out. And you don't want that. So the only way to defeat that is to always be straddling. And that was a rule that I've had other pro traders tell me many, many years ago. And when I was new, I always thought, oh no, I know better than that, blah blah. But the seasons change. We have the bull season, we have the bear season. Characteristics change. Plus, we have unexpected events that can take place. So and that can easily ruin a good day. Now, when it comes to straddling, again, it doesn't matter which direction it picks. As long as it picks a direction, we always have something to work with, no matter what. And so that is the beauty of straddling, and it allows you to sleep better. You don't have to worry whether the stock market is up or down. You can sleep better because you have something to work with. And that is why rule number 1 is to always straddle heavy on the top 3 or even the top 5 most active stock options. And there's a website that we'll go to later to look at that, to always find the top most active stock options. So that way it will always answer rule number 1. Now, rule number 2 says strike price always at the share price. Always be at the money no matter what, because if you're away from the strike price, and if it doesn't move, you're going to suffer a lot of time depreciation. Time decay will devalue both your calls and puts at the same time, and you don't want that. So if we're right at the strike price, if we're right at the share price with the strike price, then the system is not going to depreciate as much because it's waiting to see what happens. And so that is why we want to take advantage of that. note time depreciation by always selecting the strike price, which is at the share price. Rule number 3, always the soonest expiration date for the most volatility. If you start picking an expiration date that's really far out there, not only is it going to be more expensive, but there's going to be a lot less volatility, meaning where maybe one side will move 10%, but your other side gained 10%. It's always going to be at a wash. We don't want that. We want volatility. And the only way to get volatility is by picking the soonest expiration date. So if the stock moves, now maybe we lost 40% on one side, but we gained 80% on the other side. So that's the kind of volatility that we want. We want those massive big swings, and the only way to do that is to have the soonest expiration date. But we don't want to have the same day expiration date, and we don't really want to have the next day expiration date in case things don't move. If we go into a Friday and things don't move, you may suffer some time depreciation on both the calls and the puts. So if we're on a Thursday and we're going into a Friday, it's recommended to use the next week's Friday. That way, in case things don't move on going into the next day's Friday, that you're not going to have any time depreciation on either side. But if we're going into a Friday that has scheduled economic reports and where we are expecting volatility, bring it on. Let's then maybe we can consider that. But if there's nothing scheduled for Friday, you might as well just pick next week's Friday. So rule number 4, buy your straddles 15, maybe even 5 minutes before close. Just depends on how fast you are. If you're a slower person that to type in your orders to buy, then you're going to need more time. But if you're very quick on buying your orders, then you probably want to do it maybe 5 minutes before close. And so buy our straddles 15 to 5 minutes before close to sell the next morning within the first hour. So, and the reason why we buy minutes before close is because we avoided the middle of the day's volatility or ranging. Because if it's ranging, if you're holding throughout the middle of the day, all you're going to do is you're going to devalue both the calls and the puts because of the time depreciation. But if we buy minutes before close, there's no time depreciation. We're getting ready for the next day to take advantage of the morning's volatility, so that way we can sell. A lot of people think that they need to buy during the morning. That's wrong. We need to sell what we have the next morning. That way we can take advantage of the volatility that it provides. And so, but after that, we can always day trade the volatility, based on what's going on with the economic reports or the White House or the president's schedule that creates the volatility. And so, but we don't really want to hold throughout the middle of the day because of if it ranges, it's just going to depreciate. We don't want that. And that's something that can be avoided. There's a lot of things that we have control of that can be avoided. And that way we can just focus on what works the best. And so rule number 5, avoid earnings and splits unless it's a lottery play. Invest lightly. And so avoid earnings because if things don't work out, then something's going to take place that's called IV crush. IV crush stands for implied volatility crush. That means it will greatly depreciate both your calls and puts. So you could lose 20 or 40% on your calls and the puts because maybe the earnings play didn't provide volatility. And so, but a lottery play means where if you want to do it anyways, you can pick maybe either direction or maybe you can straddle, but just do it very lightly. Just like if you're going to pick a lottery ticket, Mega Millions or a Powerball, you're not going to go all in on that thing. You're going to put a couple dollars in there or whatever, $100 or whatever that you're going to do, but it's going to be very lightly. But if you win, it's going to be huge. But just to be determined, and that's why we want to control our risks And when we're following these rules and guidelines, it makes it a low risk and a high reward. And that's what we want. We don't want these high risk, high rewards. We want a low risk, high reward strategy. And these are these rules that can help implement that. Rule number 6 says avoid straddling through the middle of the day to minimize time depreciation, which is something that we've already talked about. And these are just simple, basic rules. But again, they can easily be broken, and you'll realize that when you break them, that is when you're not doing well. And so, if we just follow these simple rules, you can always add to them. Make them your own. This is just like a foundation for you. And so, going back to the economic reports. So, Wednesday, June 28th, we have the Federal Jerome Powell that's scheduled to speak right when the stock market opens. So that's going to provide a lot of volatility, which again, let's bring it on. I straddle every single day, no matter what, just like clockwork, with occasional lottery plays here and there. But I always be straddling no matter what. And so, and then we have the crude oil inventory levels. We don't have a forecast yet, but this sometimes can be very predictable because the week before the last one, it was very, very high. Not very many people were driving. And now it was very, very low. We were in the negatives, negative 3.8 million barrels. So that means that we can anticipate it going up. So now the crude oil inventory levels are going to be full, which is not good for the economy. So I can see Wednesday being a bearish day. So if the crude oil inventory levels are anticipated to be bearish, if I were Jerome Powell, I would want to pour fuel on the fire to make a bearish day more bearish. So let's take a look at Thursday, June 29th. So again, we have Jerome Powell that's scheduled to speak. That's kind of weird. 2:30. That may be inaccurate. We'll have to kind of take a look at that. I'm thinking, well, again, we'll have to take a look at this. I cannot imagine this being at 2:30 in the morning. Jerome Powell, I'm sure, is still in bed by then. And so, but to be determined, in case there's human error, there's some error. I mean, there's a good chance maybe they'll probably talk at the same time, 9:30. It's only at 2:30 here because of because it's in order by the time. So my guess is it's going to be the same time, 9:30, exactly when the market opens, just like the day before. And they'll probably talk about the quarterly stuff and whatnot. But so if he's going to be bearish on that day, most likely he's going to be bullish on this day. But we do have the GDP report, which is a quarterly report. Out of all these economic reports, this is going to provide the biggest impact on the stock market this week. So that's Thursday, June 29th. The forecast is anticipated to be at 1.4%, which normally this should be bullish compared to the previous report at 1.3%, because this is what helps the economy. But if investors in Wall Street look at this as good news is bad news, where all the government's going to see this as, we got more work to do, we got to increase interest rates. Well, we already know that they're going to most likely increase interest rates again here in a month in June 20 whatever. So it's nothing new, and so again we have to try to follow. We got to focus on the majority of the time. And so the majority of the time, the characteristics would provide bullish characteristics until otherwise. And so I'm bullish Thursday. And so initial jobless claims report, we don't have a forecast yet, but most likely we'll probably see something populate there, going into tomorrow during pre-market. Now, the unemployment report, which did go up quite a bit, we're at 264,000. Unemployment's getting up there, you guys. It was not that long ago, several months ago, it was like 230,000. It's slowly creeping up there, but it's still very, very low compared to what it was before the pandemic, which we were right around 300,000. People filing for unemployment on a weekly basis. So we are still like record-breaking low kind of stuff, but just like crude oil inventory levels, once it does these big swings, it bounces. And so if unemployment went up, most likely we should see it go down this coming week. And so that still continues to prove our bullish point here for Thursday, June 29th. The next one, we have the pending home sales report, but this report is scheduled to be 30 minutes after the stock market opens, where the other ones are scheduled to be 1 hour before the stock market opens. So the pending home sales report month over month for the month of May, which we don't really have a forecast, and the previous report, which was at 0%, which is kind of interesting. So maybe it was a wash, the same as the month before. So to be determined, we'll have to kind of see what the forecast is saying. It's definitely, we're missing a lot of a forecast here. So we'll kind of have to revisit this, which we want to look at this on a daily basis anyways, you guys. That way we can see any forecasts that got populated. We can also see the actual reports that get reported. And usually these are reported on that exact minute. So that's why we want to go in there. And the reason why we do this is just like what a journalist would do. We don't want to so much rely on news apps, because if you're relying on the news apps to let you know what these reports are doing, it's going to be 5 minutes, afterwards. It could be 10 minutes, it could be 30 minutes, or even an hour later. The news apps do the exact same thing that we're doing here, where they're looking at this, and then they're going to create an article. It takes time for them to do that. It takes time for it to blast out there to millions of people, so that way they can get the notification, read the article. The market has already taken effect. Now we can see what's going to happen before it happens and anticipate how it's going to affect the stock market before we even get the news. Again, with a lot of these pro sayings, buy on rumors, sell on news. If you're trying to buy on the news, it's already too late. And that's not us. That's not our pro trader characteristics. The pro trader plans their trade and trades their plan. And that's why we always have these meetings, so that way we can do our due diligence. And Benjamin Franklin once said that if you fail to plan, you're planning to fail. And that's not us. So the next day, on Friday, June 30th, we have the core PCE price index report for the month over month for the month of May. This report is scheduled to be released 1 hour before the stock market opens, though the forecast is the same exact as the previous report at 0.4%. So we don't know, based on that, on if it's going to provide bearish or bullish characteristics. I would call this like a wild card, because we don't normally have economic reports scheduled on a Monday or a Friday. So we do have something for this Friday that'll help provide volatility. We just don't know what type of volatility it's going to provide. It's going to provide bullish volatility or bearish volatility, but we do know it will provide volatility, which will be great for straddling. So this is for this week. Going into next week, because I don't know if we're going to have a stock market meeting because of a holiday weekend, but just to kind of look at it now, just for our reference. So Monday looks like we do have an economic report. 30 minutes after the stock market opens, we have the ISM manufacturing report. Now, we're not going to have any forecasts here, which sucks, but we'll have to kind of take a look at it, throughout the week as things kind of populate. But as I mentioned, that Monday is a half day, and they do plan to close at 1 p.m. Eastern time. So it's going to be a half day, and then Tuesday there's nothing, and then we have Thursday. Wednesday, Thursday, and Friday. But it's interesting that there's nothing scheduled to happen on Wednesday. There's a lot scheduled for Thursday, and also a lot scheduled to happen on Friday. So But Wednesday is going to be volatile anyways because of the news maybe on Tuesday, or maybe because just nothing happened on Tuesday. So Wednesday could be kind of like a 2-day in one type of volatility. So it's going to have volatility, but we just don't know what type of volatility, whether it's going to be bearish or bullish. But typically a holiday week is bearish. And so, but we need to see what these forecasts are going to look like, so that way it can kind of provide more pieces of the puzzle. So that way, if we have more pieces of the puzzle together, it can kind of paint a clearer picture. But we need those pieces, but they're just not ready yet. But it's still premature. We have a lot of time to figure that out. For now, we focus on this week. But again, so the president and the White House schedule they don't provide this information weekly. This information gets posted at midnight every day Eastern time, or 9 p.m. Pacific time. So those of the West Coast give us an advantage to look at what the president and the White House is scheduled to do the next day that could easily provide volatility. So for example, here's Friday the 23rd. Looking at this, we can see when the president may talk, because a lot of times what happens, the guy usually says something that investors or Wall Street or people that just don't want to hear, and it creates volatility, and we always need to focus on the things that do that. And especially with economic reports and the White House and the president, it affects the entire stock market system, not just certain segments or certain stocks. It affects the entire system, and that's why it is so vital and important that we are aware of what's going to happen and when it's going to happen. But then we see this little blue bar here. It says press briefing. This is usually when the White House is going to start talking, and the journalists start asking questions, and it could be questions that investors in Wall Street don't want to hear, because the White House may provide a stupid answer or a bad answer or whatever. But every once in a while, they may talk about something positive, about maybe helping out the economy, or maybe they're talking about Ford, how Ford's going to be building this new mega factory, and they're going to be offering 4,000 new jobs, and how that's going to help the economy. Well, if they start mentioning a company, all of a sudden start focusing on that, because other people at Wall Street and investors are hearing that. They're buy, start pumping it up now before it surges and goes up. That's why it's key that we are listening in live. And we can start doing that 15 minutes before it begins by tuning in to the like YouTube. You go to YouTube, type in White House Live 15 minutes before, and all of a sudden you will find all these like news companies that are preparing for this live event. Or maybe it's the president. So you go to YouTube, type in Joe Biden Live, maybe 15 minutes before the event, and then that way we can start listening in. Just like the rest of the world is. Because I assure you, Wall Street and all these other world leaders and investors are listening in. They're not relying on the news, because it will be too late. That's not us, you guys. We are pro traders. We do pro trader things, and we maintain huge gains. And this is part of that process of doing that. When you're an active investor and trader, if you're not just a long-term, you don't have to so much focus on this stuff. But this is mostly for those that are active regularly on a daily and a weekly basis. But we still have quantitative tightening, you guys. Quantitative tightening is where the government is selling stocks, though it hasn't been very massive, lately, because they've been selling a very small amount of stocks. And when you're selling a small amount during a, kind of a bullish season, going into a bullish market, you can't really notice much, because people pour that money right back into the market. But there are certain days where they are a massive amount, and we are coming up ahead for like this Thursday. For example, Thursday the 29th, here the government is planning to sell $12.2 billion worth of stocks. And they could sell it at any time that day. They could sell it during pre-market, during the market hours, during aftermarket. If they do sell it during after hours, that means it bleeds into the next trading day, which would be Friday. And so to be determined, we just have those three scenarios that can take place. But $12.2 billion worth of stocks, that is a lot, and that we should see some bearish characteristics from that. And it has still been twice per week, but we're getting very close to where quantitative tightening will be slowing back to only once a week, and then once every 2 weeks, and then once a month, and then boom, it's gone. And so but yeah, so to be determined. But we're getting ready for that. But then, once the government finds a new bottom, sometime during the next, bear season, bear market, they will probably initiate what's called quantitative easing, where they'll start buying stocks at a low price. And usually when they do that, they manipulate the stock market, somewhat to create a massive dip. That way they can buy extremely low, just like they did in the second quarter of 2020. Now, looking at the let's take a look at the earnings that are scheduled for this week, because earnings will also have a big role in volatility for this week, not on the entire stock market system, which we've already gone through that, but it will have a massive effect on individual stocks as well as certain areas of the stock market. Now, here's our schedule this week for our earnings calendar. So tomorrow, for Monday morning before the stock market opens, we have Carnival, which they have those cruise ships, is going to have huge news tomorrow, which we'll kind of take a look at its analysis. So, and then Tuesday morning we have Walgreens, and then General Mills on Wednesday morning, UniFirst, and then Wednesday after close, these are a couple big ones. Micron, that is a semiconductor company, which will also affect other semiconductor stocks like AMD, Nvidia, Intel, those types of things. And so, even though part of our rules is for guidelines of straddling, we want to avoid straddling earnings, but we can also straddle it's sister stocks like AMD, Nvidia, Intel. We don't have to straddle this particular stock, but because the stock will affect the other ones won't be affected by implied volatility crush or IV crush. So that is another way around the system to avoid those high risk situations. So that way we're going with a low risk, high reward strategy. Then we have BlackBerry, which will also have their earnings after close on Wednesday. Now Thursday morning we have Paychex, Rite Aid, and McCormick. But the big one for this week is going to be the Nike. Nike is scheduled to release their earnings Thursday after close. And I don't know if you guys watched their that new movie with Matt Damon and Ben Affleck, but usually when you have certain things like that, that's like massive advertising for the brand. And so and even though we're in during the spring and now the summer season, there's a lot of sports going on, and a lot of people buy Nike clothes and equipment. So this is kind of Nike's prime time. So all eyes are going to be on Nike. Now Friday morning before the stock market opens, we have the Constellation brands, which is more or less the Corona and Modelo. And who just won the number one most popular beer brand in America? It's Constellation brands. It's Modelo over Budweiser. Due to all of their bad management, so this is going to be huge, you guys.
So let's take a look at the analysis on some of these. So Carnival, which again we talked about, is scheduled to release their earnings tomorrow morning, Monday morning, before the stock market opens. It is expected that they're going to beat their estimates. There's a lot of people like to go on cruise ships during the spring and the summertime. So this is very investors are bullish, going into the company's earnings with an 80% expecting an earnings beat, which is extremely high. Typically, these usually have right around 65% expecting an earnings beat. 80%, that is huge, you guys. Those odds are like 4 out of 5 odds. This stock is going to beat their earnings. But option traders are pricing in right around 11.5% price movement in either direction on the earnings, where the stock has moved right around 8%. So we are expecting more volatility out of this one, especially at 80%. As a lottery play, I would just buy calls on this one, but very lightly. Do not go heavy, because a lottery play, this is a high risk, high reward situation if you do decide to play this one. But this is nice. But again, this is scheduled to be released tomorrow morning before the stock market opens. So those that are not already participating in it is most likely too late. But we can always take advantage of the volatility afterwards. Now Nike, which again is something that we've talked about, and that's why I like to have the picture kind of explain a little more about kind of what's going on here. Now Nike, which has confirmed the release of their earnings on Thursday after the stock market closes, but investors are expecting them to beat their estimates, but investors are bearish for some reason going into the company's earnings release with a 63, almost a 64% earnings beat. A lot of people ask, why is that? How come Nike is expected to beat their estimates, but investors are bearish? Well, so typically, let's take a look here. We'll go to Webull the Webull app really quick. Let's take a look and see. And so this is why right here. Let me take that off really quick. Hold on here. So what do you see here, you guys? You see that the Nike's price wait, I'm not even on the right one. Hold on. I don't know why. There we go. So let me get a year's worth here. Okay, so I have a year's worth here, and so the price may already be high, and so if the price is already high, because Nike, not that long ago, in when the market was at its bottom during our last bear season, it was down right around $82, $80, $90 or so. And now it's up there about 110. It's not that big of a difference between the two, but percentage-wise, that's like a 30% difference or so. And so that's still quite a bit. But investors and people at Wall Street may think that the price is already high enough, and that anticipating that it's going to beat its earnings, and that's why we may see it go down, or because it's already priced in beating its earnings. And so that's why we always want to see. Now, if it was the other way around, if it was already kind of on the bottom here, which maybe it is, maybe this is kind of the bottom, and maybe it's ready to go back up. But when we're looking at the moving averages, it's kind of fumbling. It's already trending down. The moving average lines have not yet crossed over each other, has not provided an uptrending indication yet. But the MACD has. The MACD is telling us, oh no, it's going to go up. Just give it some time. The moving average is fumbling though. It's not. It could easily trip and fall and go right back down. And so, but there's a lot of buying, a lot of selling activity that we can see here with the volume bars as we get closer to the earnings report. But overall, though, going from 82 to 109, again, investors and people at Wall Street may think it's already priced in, and that's where we want to. That's why we see this. Is where we see that Nike's expected to beat their earnings, but investors are bearish going into the company's earnings release with a 63, almost a 64% expecting an earnings beat. However, option traders are pricing in right around a 7% price movement in either direction, and so just be prepared for that one as we have more time to figure out what we're going to do on that one. Now, Walgreens, which is expected to beat their earnings, Walgreens is confirmed to release their earnings on a Tuesday morning before the stock market opens. I would say Walgreens has about a 50-50 chance of beating or missing their earnings, but option traders are pricing in right around a 6% price movement in either direction. But we'll have to kind of keep an eye on that one, as well as the Micron, which is a semiconductor. This is, like I said, this is a big one, you guys, for the semiconductor segment of the stock market. Micron is expected to beat their estimates, and it's confirmed that they're scheduled to release their earnings on Wednesday after the stock market closes. The investors are bearish, though, going into the company's earnings release with a 55% expecting an earnings beat. That's not good. So we can always take a look at their charts and graph to see kind of what's going on there. And so it looks like they've just been kind of fumbling. They're just kind of been going up and down, not really going anywhere, for quite a while. The last year, and so, but it does look like it's priced pretty high. So that's where I'm kind of seeing that, okay, maybe investors and guys at Wall Street are saying it's already priced in. And so that is why investors are bearish. So this is how we kind of read this stuff. And so option traders are pricing in right around 6.5%, almost 7% price movement in either direction, where normally it moves right around 4 to 5. And so with that kind of volatility, it can easily move AMD and NVIDIA about half that. And if you've seen what your stock options can do when AMD and NVIDIA moves 3-4%, it is significant. And so this will be a great day to straddle, because we want that type of volatility and those significant movements. So next one is going to be General Mills. General Mills is usually kind of a mild one. General Mills is expected to beat their estimates, and they are confirmed to release their earnings report on Wednesday morning before the stock market opens. Investors are bullish going into the company's earnings release, with a 72% expecting earnings beat. So that's just a little above average, as a lot of people have been investing in food in the last year due to the knowing that the inflation prices were going to provide these companies most likely record-breaking profits. But option traders are pricing in around a 4.7% price movement on earnings, where the stock has usually moved right around in the lower 4%. So we're expected a normal day with this. Next one is going to be paychecks. Now, pictures can always say 1,000 words. If you're not sure exactly what the company name usually is, sometimes a picture can provide some information, like an online human resources department, or a payroll, benefits, insurance type of management system. And so Paychex is expected to beat their estimates. Paychex is confirmed to release their earnings on Thursday morning before the stock market opens. Investors are bullish going into the company's earnings release, with a 63% expecting an earnings beat. Option traders are pricing in right around a 6% price movement in either direction, where normally it moves right around 4%. Now here we go, you guys. Constellation brands, we got Corona, we got Modelo, which is actually, if you've not had Modelo, it's a very good tasting beer. I usually prefer the dark one. That's where all the flavor is. And so, but Constellation Brands is expected to beat their estimates. Now the ticker is STZ. It is confirmed that they are releasing their earnings on Friday morning before the stock market opens. Now, unfortunately, our analysis doesn't have a percentage of which way it's going to go, probably because it's probably really high. But option traders are pricing in right around a 4% price movement when normally it moves, right around that. So, but it could be a lot more than that if they see that the revenue was record breaking. This stock could, but let's take a look. STZ with the stock charts. STZ. Let's take a look to see if it's already priced in or not. Now, looking at this, I would definitely say, it's priced pretty high, but it's been that high even before all the drama with Budweiser. So it's been that high before the Constellation Brands or Modelo was awarded the America's #1 beer brand now. And so I think once this report comes out, this could potentially put the Constellation's brand on a whole new level. But that's just anticipating. That's not really something that it could. It could happen, but to be determined. We're just seeing something that just hasn't really ever happened because Budweiser has been America's #1 brand for forever. And so but let's take a look actually. So then we have Rite Aid. So Rite Aid is coming up soon. So Rite Aid is scheduled to report their earnings on Thursday, June 29th, before the stock market opens. Investors are bearish going into the company's earnings release with a 56% expecting an earnings beat. Now, before the pandemic, this company, which was struggling, with revenue, the stock was struggling. It would have to do reverse splits. It was trying to file for bankruptcy protection. And then all of a sudden, in 2020, during the second quarter, the government shut down a majority of businesses except for essential businesses, and Rite Aid was one of them. All of a sudden, Rite Aid became a very profitable company, and it bought them time. However, we're going back to normal, and Rite Aid is struggling now, and they're probably going to go back to needing to file for bankruptcy protection and yada yada, and so that's why investors are bearish, and that's why they have a 56% expecting an earnings beat, just a very, very low percentage out of all the other companies that we've been talking about. Option traders are pricing in a 29% price movement in either direction, where normally it moves quite a bit, usually around 16%, but 29% likely it's going to go down with a 56% chance of that happening. So, to be determined. It may be a good one to maybe straddle, but penny stocks are not normally a good one to straddle or even to utilize stock options. But as a lottery play, I would plan on doing puts myself as a lottery play, going lightly, and if it does miss and go down even 10%, 20%, 30%, this is going to be a very, very nice high risk, high reward play. So this is definitely going on my watch list. And then the next one is McCormick. I love their seasonings. Is expected to beat their estimates. McCormick, which is MKC, is confirmed to release their earnings report on Thursday morning before the stock market opens. Investors are bullish going into the company's earnings release with a 77.8% expecting an earnings beat. And then you'll notice a lot of these food brands do very well during the spring and in the summertime. There's just a lot of events, weddings and parties and barbecues and this and that, and so that's why a lot of people invest in food, right after the winter season. Option traders are pricing in right around 6% price movement in either direction, and where normally it moves right around 4%. So we're expecting, quite a bit more movement from McCormick. Now the next one is the UniFirst, and so again, as you're not familiar with what the company is, the picture can say 1,000 words, and you can see that this is one of those uniform delivery companies for many different industries. They are scheduled to report their earnings on Wednesday before the stock market opens. We don't have a percentage expecting an earnings beat, because most likely it's probably going to be around 50-50. Option traders are pricing in right around almost 2% price movement in either direction, where normally it moves right around 4 to 5% lately. So, but for some reason, we're not really expecting a lot of volatility with this one. Maybe they're more volatile during the fall and the winter season. But last but not least, this one is just a little extra one. This is our 11th analysis. So this is just kind of a wild card. I'm not sure. I've never heard of this company. This is the first one we've ever looked at, but obviously they're a healthcare company that must be, we'll have to kind of look at it, but maybe they're new. Again, I've never heard of them before. Accolade, ACCD is a ticker, is confirmed to release their earnings report on Thursday, on June 29th, after the stock market after the stock market closes. Investors are bullish going to this company's earnings release, with almost a 69% expecting an earnings beat. However, option traders are pricing in right around a 21% price movement in either direction. And lately, I guess it's moved right around 25% in recent quarters. So it's definitely one that we need to kind of do a little homework on before they release their earnings report. And then the next thing that's always important to look at is the investing.com's top 5 things to watch in the markets in the week ahead report that they release every Sunday morning. Because as we do our due diligence, we want to make sure we're not missing anything. And sometimes, in the investing.com may have found something that we may have missed. So inflation data from the United States and the Eurozone will help shape the expectations for the interest rates while the central bankers gather Portugal for the European Central Bank's annual forum. The economic data out of China will also be in the spotlight as the recovery in the world's number 2 economy falters. And events in Russia will also be closely watched after the attempted assertion challenged President Vladimir Putin's grip on power. The number one thing on investing.com's top 5 things to watch this week is the United States data, which is something that we've already looked at and is something that we've already talked about. Now, the second one is the first half drawing drawing to a close, and that's something that we've also talked about, how we're approaching the end of this quarter, and then the week after next is a new month. It's a new quarter, and it's a whole new earnings season. Earnings is now over. We're going into new earnings season, and like I've mentioned about the EV stocks. EV companies, a new quarter, they'll talk about how well they did or how bad they did last quarter. So we're going to see all EV stocks are going to either surge, they're going to plunge, they're going to be extremely volatile either way. Be prepared for Monday, July 3rd. Because a lot of these companies are going to release a lot of this information. Elon Musk, he's going to tweet his little stuff, and it could be bad, you guys. It could be slowing down as interest rates are up. People aren't probably financing as much anymore. They're going to wait until interest rates go down. But people can only wait so long until they have to do something. Just because. If you get into something, whether you're buying a house or a vehicle, the interest rates are high now, but when they start lowering interest rates, you can always refinance. It doesn't mean that whatever interest rate that you get is going to be permanent. You can easily refinance at a lower interest rate when the government does interest rate easing. So, but like I said, we're going to have a lot of volatility, that Monday. So just be prepared that it's a new month, new quarter, and there's just going to be all kinds of new reports are going to be coming out. But once we get through that turmoil week, the next week will be kind of recovery week, and we're ready to continue our uptrending bullish season, bull market momentum. So it's full on bull mode after that for the next 3 months. As we get closer into October, well, the end of September, that's pretty much, that's usually when we usually see our peak, maybe October. But usually at the end of September, that's usually the end of all of the, the technology presentations and all that. Apple will usually do their reveal. Let's talk about Apple really quick. So Apple, that's usually the time where they reveal their iPhone, yada yada. Have you guys ever watched when Apple revealed their iPhone X? That day they were revealing the iPhone 8. It was all about the 8. The small, the large, the medium size. Now we got the colors. And then, so normally, they end it there and the show's over. Well, all of a sudden, Tim Cook, after he was done talking about the iPhone 8, he goes, but wait, we have a surprise for you. And then all of a sudden, the iPhone X came out. We're like, what? What's going on here? But they surprised us with something. And so, but it is anticipated, at least with me, is that they are going to do the same thing on their electric vehicle. Now, they announced several years ago, I think in 2019, 2020, that they are going to get in the car business. They're going to be building an electric vehicle. And when we look at when a company reveals an electric vehicle, they start taking online reservations. But we don't see the vehicle until about a couple years, at the least. And so, but if Apple can reveal their car this year, they'll start taking reservations. Apple stock is going to surge through the roof. And because Apple is now doing something they've never done before. And now they'll be able to manipulate the investors by saying, oh, we have hundreds of thousands, if not millions, of these online reservations. Apple will never be able to produce that amount. Just like Elon Musk with the Cybertruck. They took hundreds of thousands of online reservations, but they used it to help manipulate their stock, and it was highly successful. Well, it's a great way for Apple to now kind of start doing the same thing. And so just be prepared. It's inevitable. It's going to happen. It's just a matter of time. There's a good possibility that this could have been revealed last year, but there was also a possibility that it would have been delayed another year due to the pandemic of 2020. Caused that delay. So that way it would have been revealed. Normally it would have been revealed 2 years after they announced something, which would have been in 2022. Now it should more than likely be revealed this year in 2023. Now Elon Musk will also do his little thing. Like last year, he revealed the robot. Though Elon Musk has also mentioned he wants to come out with a $25,000 all-electric car. Now, I don't know if this is going to be a two-door little, or is it going to be a little tiny little dinky thing like a Nissan Leaf. But a $25,000 all-electric Tesla, I mean, he's coming up with something that is going to introduce a vehicle to another type of customer. A customer that maybe is going through college, maybe right out of high school, someone who's just starting out their credit or whatever, or just starting out their life. A Tesla Model 3 right around $40,000, that's somebody who's already gone through college, already has their career or whatever, already has established things. When Tesla first came out, they had a $100,000 car. That car was only for definitely a particular a customer that was very, very well off. $25,000 Tesla, you got something for everyone. And so that is something that is going to help Tesla's stock reach very, very high levels. And we've talked about this before in the past, and we've seen unusual calls activity with Tesla at $825. And Tesla's stock is still right around that $200, that mid $200 area. It's still far away, and it still has more work to do. But if they reveal a $25,000 Tesla this year, Tesla could easily get to that $800 a share, you guys. Plus their robots, which they call Optimus. if they start taking online reservations for that robot that Elon Musk wants to mass produce millions of, it's also going to create a massive surge for the Tesla stock. And you guys, we are like, what, 2-3 months away from that happening. And the $825 call strike price, its expiration date is for next January. So, this is all going to take place very, very, very soon. And it's going to happen very, very fast, you guys. So again, one of our pro trader sayings is buy on rumor, sell on news. Do not wait for this to happen. You need to know of what's going to happen before it happens so you can take advantage of the situation. It's inevitable this is going to happen. It's just a matter of time. But again, we can try to forecast, predict when this is going to happen, but it's going to happen no matter what. And so number 3, Eurozone inflation. Number 5, China PMIs. Number 5 is the Russia turmoil, which could also provide, some volatility for Monday. Though, when the news, so I watched the news came out with the RT news. So Russia's news was saying, we came to agreement. They're going to go back home. We're not going to, charge. We're not going to, get them in trouble or anything. Or bygones would be bygones. That does not sound like Vladimir Putin. If you were that guy, if somebody crossed you, are you just going to let them go? No, you're not going to do that. Yeah. So, there's a lot of lying, a lot of deceiving going on there. But this could be just a way to kind of manipulate the world market. Say, everything's already fine over here. Just go back to normal, blah, 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 And so, but it's a great way to possibly continue more of this bullish activity. And so that way we can kind of, forget what just happened and we can kind of move on with life. But, to be determined. So, but let's take a look at the options activity for last Friday before close. So with the options activity we see here, the top 3 or even the top 5 most active stop options was our Tesla, Amazon, Apple, Nvidia, and AMD. So if we're going back to the straddling guidelines and the rules, these are the most active stock options that we want to straddle heavy on. But this page can also provide us a lot of other valuable information, as well as the price of the stock, how it changed in percentage-wise or the dollar amount, but also the option volume. Look at Tesla. 3.5 million in options volume dominates the page significantly. Combined, probably you add all this stuff and you probably get to 3.5 million in options volume. But out of this amount of volume, about 58% of it is betting that Tesla is going to go up, whether it be that day or at least the next trading day. So if you are straddling, we can kind of use this data as a way to help follow the money. So if we want, we can go maybe 60% calls and a 40% put ratio. So that way, if investors are betting that a Tesla is going to go up Monday, and we're in 60% calls, 40% puts, and most likely calls is going to be in our favor, we're going to do a lot better than we would if we were 50-50. But in case if things don't work out, this 40% can, and if the stock goes down, this 40% can still help make us a lot of profits and gains. Maybe not as much if we were 50-50. Things to work out, but we were pretty sure that, due with all this stuff that, it was most likely going to go up. But, it's not a very high number. A lot of times investors and traders are usually more optimistic than what they should be. So if we want to reduce that, then I can look at this as a 50-50. By taking the optimism out, we can reduce that by 10%. 10% would be a good way to lower that optimism. So that way we can kind of stabilize it a little bit. So if we were Amazon, we can look at 73% of this amount of investors are betting Amazon's going to go up. But even if we, reduced it 10%, we're still at 60%. A lot of investors are still pretty bullish on Amazon going into Tuesday. Then Apple's still almost 50-50, just like Tesla. Nvidia's almost 50-50. AMD's almost another 40-60. But sometimes we can also look at this and find unusual trading activity. I don't see any now, but sometimes we could see an 80% or even a 90% calls or puts. And so, but when we're looking at this regularly, we can normally memorize what's normally on here, but every once in a while we may see something that pops up on here that's not normally on here. Like, for example, Carnival. Carnival is not normally on here. Carnival is currently at $15.80, and they're only up 1/4%. That's nothing. But all of a sudden they have more options activity than normal. And out of this options activity, 62% are betting it's going to go up, and almost 40% is betting against it, betting it's going to go down. But we see that they have earnings coming up Monday, and a lot of people are betting that Carnival is probably going to beat their earnings and it's going to go up. So people want to take advantage of that. And that's just where we can sometimes find unusual activity or unusual buying activity. But sometimes, and this is which is the most active stock options page on barchart.com, we can also look at the most active option volume leaders. And so this will help provide us most active individual calls and puts. But when we're looking at on the weekend, like now, a lot of them are going to be expired. And that's where we see the DTE, which is the number of days until its expiration, is 0. And the expiration day has been passed. Though there are a few that we can see with numbers on the days until its expiration date that are still active. For example, Rivian. So Rivian, which is at $13.53, we have a $17.50 call strike price that expires in June 21st and 27 days from now. Open interest was which was $75,000 with the volume activity of 66. Now I wish that was higher, but I'm pretty sure this is probably still buying activity. And going into Monday, most likely this is going to accumulate. So we'll have to see, will it merge or will it subtract? If it merges, if this volume merges with the open interest, because the open interest is the total number of open contracts prior from the current trading day that have been traded but not yet liquidated via offsetting trades, meaning people bought but they have not sold yet. But if the volume for the current day is higher, then that means that's pure buying activity. They're buying more. But if it's less than the open interest, it could be buying activity or it could be selling activity. So we'll have to see going into Monday if this open interest goes up or down. If it goes down, then people are getting rid of it. If it's going up, people are buying it, and we need to focus on it. And I believe that's what's going to happen, because what have we been talking about regarding Monday, July the 3rd? We were talking about the EV stocks. Now we're starting to see some more pieces of the puzzle coming into play. And we found one. We found one, Rivian. People are going to bet Rivian is going to probably say something that investors are going to absolutely love. They're probably going to say, oh, we had record-breaking sales and deliveries. And then people are going to be like, oh, crap. Rivian's only $13.50. We need to start buying now before it gets to $100. And so this is one of those pieces of the puzzle, you guys. So we can't, this is our radar. We can't let anything fly under the radar. We have to spot everything. And so the next one is Tesla, which Tesla is right around $156 a share. We have $256 a share. We have a $260 call strike price that expires this coming Friday, the 30th. And we have a $300 call strike price just in case if Tesla decides to, get that far. But, it's not recommended to go out of the money. We will always want to try to stay at the money or very close to the money, because we don't want to suffer time depreciation. We always want to invest smart, work smarter, not harder. And so always stay close to the money. So this is a good one. We can see that the volume is at 64,000 where the open interest was at 9,000. So this is showing pure buying activity. People are going into Monday very bullish. And then we have an Amazon call. Amazon, which is currently at $129. We have a $130 call strike price for Amazon with a lot of volume. 56, almost 57,000 in volume on that call, where they only had a 22,000 in open interest. So this is showing pure buying activity that's going to go on top of that. So the next one is an Apple put. So we do have some straddling activity here with Apple. We have a $185 put strike price with the same expiration date. A lot of volume on that one. Next one down, we already talked about the $300 call on Tesla. We do have a $250 put strike price for Tesla because there's some straddling activity there. Even though most people are bullish for Tesla, they're still going to play it safe. You know, you never want to have calls without puts. You never want to have puts without calls, just in case. If things don't work out, you always have something to work with. A lot of volume on that one. That put has 44,000 in options volume with 10,000 in open interest. Next one down is a $187 call strike price for Apple. A lot of activity going on that one. $170 call strike price for Tesla. A lot of activity on that one. And then we have a couple more Tesla calls and puts for straddling activity. So for those that are more long-term, or maybe you can't actively trade very often, you know, there's always some activity that we can spot for that when it comes to open interest. So if we sort out the page by open interest, we can see what people are kind of holding onto, a shorter and a longer term type of time frame. So we have AMC, which is twice on the list, a lot of open interest. It's never recommended to be holding or participating in manipulated stocks. Manipulated stocks like GameStop and AMC, a lot of people are holding on to it, and they'll manipulate it and try to get people to pump it up and this and that. We don't need to participate in any of that stuff. Because usually, they have phases. They go up. Once the phase is done, it goes down. And that's what it's been doing. And AMC, that's all it has is puts. But with this longer and shorter term type stuff, if you're not into stock options, you can still utilize this to buy shares. So if we're looking at, like, for example, Nikola. So Nikola, which is currently at $1.29, we have investors that are betting it's going to get to $2, but we also have some that are betting it's going to get to $1. So we do see some straddling activity here. But if Nikola, which is currently at $1.29, and you buy shares of it, and it gets to $2, that means you just gained, like 80% just from holding a stock. But this is saying that that they're betting that Nikola, which is an EV company, is going to reach $2 by sometime in January of 2025, which is right around 573 days from now. But if it does that, an 80% gain. But even if it reaches $2, it can easily reach $3, $5, $10, and so on. And you'll be owning this share at basically nothing. You'll be like, man, I basically got this practically for free. And so, Nikola's past has a rough history. They've had some lawsuits. They've done some manipulating. They've tried to, put the cart before the horse. But they're still there. They could easily do the right thing and become a successful company. A lot of their concepts are amazing. Between their EV little pickup truck and their semi truck that they wanted to get involved in. And so, but as the America wants to really go gung-ho on this whole EV thing, like California implemented a deadline by 2035, all new vehicles sold in that state have to be all electric. Hawaii did the same thing, this state, that state. Well, my state, in the state of Washington, because I'm in the Seattle region, our governor was like, that's a great idea. Let's beat everybody to the punch. And so he implemented a deadline by 2030. All new vehicles sold in the state of Washington are required to be all electric. Well, as we get more closer to these deadlines, all these companies are going to have to participate to make things happen, and that's including Nikola. So Nikola, they're on the top of the list for option. I mean, open interest for a very, very good reason. Even though we have a put, this is a very short term. This guy is going to go away. People are probably selling it and getting ready for Nikola to go up, and that's kind of what I'm seeing here. Always follow the money. That these numbers don't lie. It's not like we're relying on somebody just talking out their butt. This is numbers that and events that are actually going to take place, and so just be prepared. A lot of this stuff is like highly valuable information that we can really get. As we follow the money, where investors are putting their overall money. We're talking millions, if not billions of dollars worth of stuff. Now, we have ET, which is currently at $12.50. We have a $15 call strike price. If you buy shares of it and it gets to $15, you just gain, 15, 20% or so. Bank of America. We talked about Bank of America earlier today during our meeting, as we talked about that whole the economic cycle of this part here. When the market bottom was just several months ago, we bought low at the technology stocks. We're just waiting for the bottom for the finance stocks, and so so if we see Bank of America, which is currently at $27.75, if it gets to $35, that's a pretty good gain. That's that's what, 20% gain, and I think it's a stock that still pays dividends. So but by holding onto that, not only is it appreciating, but they're going to pay you every 3 months just for holding their stock. So look at this. So Bank of America, BAC, using the charts, we can see that Bank of America is finding their bottom, out of this. They're $27, whatever. They're bouncing on the bottom as interest rates are going up, blah blah blah. But what we're seeing too, because it's trying to wait to see what happens. And I don't know if you've noticed, your local credit union's interest rates are going up. They're probably what, 6.9%, 7. You go to your local credit union's website, it probably says get a brand new vehicle for as low as 7.9%. Well, we start looking at these other major banks like Chase or a Bank of America. I think they're doing, last I saw, they were doing like 5.9%. So now these major banks' interest rates are lower than your local credit unions. Where before it used to be the other way around. The local credit unions had a much lower interest rate than the major banks, and the major banks would kind of suffer from that. Now it's the other way around. Now the local credit unions are suffering. We're starting to see them kind of buy each other out and doing other things, and most likely we're going to see these other major banks. They're going to pull through this because they're the ones that are offering a lower rate, so people are going to finance their cars and other things through them rather than their local credit unions. Because every 1% makes a big difference between 5.9% to 7.9%. Obviously, people are going to, especially with people with great credit, whether you're a 700 credit score or an 800 credit score, you're going to go with whoever has the lowest credit score, and that's most likely it's going to be a national bank. And so, but once the market starts realizing that, let me go back here, we're going to start seeing they're going to start recovering, and that is why. Because we're right about here. We're not quite at the full recession yet. We're just in the beginning of the bull market. We're still, we're right at and so this whole phase between the market bottom and the bull market, the beginning of the bull market, these are the ones the stocks that we have to focus on, is the technology stocks and the finance stocks and the cyclical stocks. But once we get to the top of the market, which is going to be later on at the end of this year, those are the stocks we need to sell. Get rid of those and then focus on energy stocks, basic materials, maybe staples. Energy stocks is going to be the big one, because when you look at oil and other energy stocks, they're slowly coming down. Even though our gas prices are coming up, the oil's coming down. We're at what, $68, $69 a barrel now, but it's going to find its bottom. But once the finance and technology stocks find its top, we get out of those and get into the energy stocks once they find their bottom, which should be right around October, November ish, somewhere around that. So that's the time we need to keep switching back and forth between that time, so we can always maintain those things. But as we get more of the pieces of the puzzle together, this is part of those clues. So Bank of America, $27.75. Call strike price, $35. It expires next January. Doesn't mean investors are going to hold on to their stock options throughout the expiration, because that would be foolish. Because if you do that, you're going to have a time depreciation the closer you get to the expiration date. So people are going to sell that right around that time I just told you, October, November, and then they're done. And so the open interest will then start trickling down towards the bottom, and it'll dissipate, because now people are securing their gains, and then we'll start seeing energy stocks starting to come up. So again, buy on rumors, sell on news. Just be prepared. Make sure this is on your watch list, because this is going to provide you guys huge amount of gains. So going down the list some more, let's see if there's any other really, really good ones. Activision. So here we are, $81.90. So let's just say it's $90 or $82. We have a call strike price that expires next January as well. $95 is the strike price. So if you buy shares of Activision at $82 and it gets to $95, that's what, like a 20% gain. And Activision, which is a video game company, if you're not aware of them, they make like games like Call of Duty and other things. And didn't Microsoft buy Activision, recently too? So Microsoft and Activision could be working on something. I mean, it wasn't that long ago where Microsoft bought them. And so, obviously they have something up their sleeve, something in the pipeline that could easily happen, and we could easily see what it is before the Christmas holidays. And so this is where we're starting to see some activity with Activision. There's currently at 101,000 in open interest, with a daily volume activity of around 3,000. But just to be determined. Investors are investing into this for a very good reason, and a lot of times this could be based on insider information, things that we don't know about, the things that there might not be news yet. But once there's news, that means the price is already high. It's already priced in. It's going to be going down, and a lot of people are like, "How come it's going down? It's good news. I don't understand." Well, it can be difficult sometimes. I know. I've been there. I've done that. But we have to try to understand all the rules and the characteristics. That way it's like playing a game Monopoly. You'll become a better player with the board game if you know the rules. And so, but you don't know the rules unless somebody tells you the rules, or unless you find the hard way. That's one of the reasons why we like to participate in these stock market meetings, is that way we kind of go over things together and talk about things. That way you can understand how things work and take advantage of it, because the stock market can provide you an unlimited income. You can make $100 a day, you can make $1,000 a day, you can make $10,000 a day, you can make $100,000 a day from the stock market, especially from straddling. It's an endless amount of income. There's no reason to have a 9-to-5 job and to help someone else's investment with their company when you can easily invest in yourself. And so this is extremely important. And nobody else, this isn't going to be taught in school. Nobody of your friends or family are going to know any of this stuff. This is stuff that we specialize here, and that's why we always get together and talk about this. So other than that, I think that is all that I have today. I'm sorry that it took this long. Anybody have anything, any questions? You guys want to go over anything? Did you want to bring anything to the table? Did we miss anything? Feel free to unmute your mic if you want to talk, or you can also screen share too. Just let me know. I can turn off my screen. Anything, you guys? Are you guys ready to rock and roll? All right, guys. Thank you so much. We'll see you guys next time.